Hi all. Well, first of all, thanks for the opportunity today. My intent today is just to walk through a bit of a background of where we've been, what we've got to, where we've got to with open banking, as far as where we're going, some of the opportunities, and just to paint a bit of context and relevance to LIXI and LIXI members as well. So I think Shane's going to ask a few questions as we're sort of walking through the slides, and we'll have Q&A at the end as well.
Yeah, I might add that we've got the Q&A open, so if you'd like to ask any questions, I'll keep an eye on those and bring them to your attention, Mark, if there's any questions raised.
That's awesome. Thanks, Shane. So yeah, bit of a quick background. As Shane said, I work for the data standards body. I'm our lead architect for information security and banking. We fit currently within CSIRO, and for those that don't know, just quickly, CDR is being delivered by a very multi-agency group of teams. So where a lot of the legislation and the designation of sectors comes down from Treasury, ACCC is tasked as a co-regulator with the OAIC, and they also have responsibilities for setting rules as well as enforcement and some of the software build. So they provide some of the software solutions as well, and accreditation. Where the data standards body fits in is that we're responsible for taking the rules and the scope of the designation and then implementing technical standards and consumer experience standards that the participants within the CDR can then apply and have to conform to. So it's probably something that's fairly familiar for LIXI members. Obviously, LIXI has quite a rich and mature set of technical standards, and we're going through that journey. So we're still quite new from the perspective that the ecosystem is really just starting to find its feet. But we currently work across two sectors. So banking is the one that probably everyone knows about and talks about from an open banking perspective. But we've also started work on the energy sector as well. So really the intent here is to have an economy-wide solution where the consumer data right applies to all sectors. As far as sort of our implementation process or our design process goes, it's probably not too dissimilar, I think, to a lot of what happens for LIXI and for LIXI members. Maybe some of the things that happen that might be unique or different is that there tends to be quite a lot of the rules and the policy setting that's upfront that establishes how we're entering a sector or how we're solving a particular problem. But that then typically flows through to a bunch of design teams, and we take in a number of inputs as far as how we make and adopt changes. When it comes to changes, there's obviously the rules, which is it's fairly easy that we can look at what the rules are saying and consider the aspects around what would require compliance and technical standards. But we also look at a lot of this being driven via our community. Obviously, some of those are probably going to be LIXI members as well. So we have quite a high participation rate across consumers of data, which we call accredited data recipients, as well as the producers of data, which we call data holders. So at the moment, those are the banking accredited deposit-taking institutions. So we take that on, and we really do see this as a way to co-evolve the ecosystem and make sure that the data and how the data is shared, that it's relevant to consumers, but it's also relevant to data holders and how they see the value of data being shared. And we work quite closely just to make sure that there's any gaps or improvements that we make. They tend to be quite heavily driven by the community, opportunities for optimization and improvement as well. So once standards are set, they then go through a process where they become approved and they become formally part of our data standards. From there, they introduce compliance obligations for the participants. Oftentimes, the data holders have compliance obligations which require them to meet certain timeframes, and then that sort of flows through the ecosystem to monitoring and regulation and complaints and compliance. But I think probably the more interesting stuff, the stuff I wanted to talk about today, is kind of where are we at? What are current barriers that we're seeing to adoption of open banking, but also the opportunities. So where are we going, and potentially how might that be relevant to LIXI? So if we stop and pause just for a moment to think about where we are, there's been a long history about its designation and the introduction and the review, such as the Farrell review into open banking. But looking at sort of some of the implementation milestones, July this year, the 4 major banks went live with consumer data sharing. And we kind of split the data that is shared into 2 categories. So we have product data, which is kind of like a catalog for comparison websites to be able to access and then compare products that are available in the market. In a way, it is like digitizing the product disclosure statements for all of the banks. And then we have consumer data. So it's the data that's collected on you or I as individuals as we deal and interact with a bank over the course of that banking sort of, lifespan. So the consumer data is really, I guess, it's the main set of data that is most relevant to a lot of the use cases that the CDR is there to provide for. And it's within an authenticated space. So we'll talk a little bit more about the consent model in a couple of slides. So the big 4 banks went live with this first phase of consumer data sharing, which was to share transaction and savings accounts and the data from those in July this year. From there, we had the non-majors, which are currently starting to build on a number of aspects. The main focus at the moment has been getting live with their product data, their product reference data. So they're currently providing their sort of public APIs around that. And the big 4 banks have now moved into probably sort of the richer opportunity space around residential lending and mortgages. So the way that all of the banks sort of work through consumer data sharing is by tranches of data or types of products. And so we started with transaction and savings accounts. They're moving into lending and mortgages. Phase 3, which is an obligation for the 4 major banks or the initial data holders, from February next year, will be business accounts, line of credit accounts, leases, and so forth. So they'll still be using the same technical APIs and foundations that are there already that they support. It'll just be the type of data that is now accessible to consumers.
Hi, Mark. Just a quick question.
Hey.
The product data, there's no authentication around that. Is that correct?
No, that's right. So it's an interesting one. So it's the product reference data is publicly available to anyone. It could be, me or you, just as a Australian citizen, or it could be a comparator website or someone that wants to consume and provide a service on top of that public data. So you don't have to be accredited. You don't have to go through a compliance process to be able to access that data. But then to access the consumer data, there's stricter regulations. So you have to go through an accreditation process. You have to have certain certifications and the like. And that's probably where most people are going to be playing in that space. Yeah. So the non-majors represent all ADIs in Australia other than the 4 major banks, and they're effectively on an implementation track that's 12 months after the 4 major banks. So any of the obligations that the 4 major banks have gone live with, you can expect that generally they're going to go live about 12 months later. There's a couple of exceptions. So what we're seeing is some of the non-major ADIs have chosen to go live earlier than their scheduled compliance dates, and we actually have 2 non-major ADIs that are either live or are moving to become live very shortly with their equivalents to the phase 1 July 2020 obligation. So they've gone, almost 9 months ahead of time, which is great to see. The benefit of that, I guess, is that they're starting to get their consumers, their customers, access to this market, and they're starting to be able to start to move more rapidly as far as some of the services that they offer. So there's a lot still to go, and I think I'll talk about this in the barriers. But obviously, until we have that mass penetration of the market, we're probably not going to see the full value realised to consumers until we have access to all of those sort of non-major ADIs that come on board. So I guess we'll expect to see that starting to happen, more voluntary entrance into the market sort of mid next year, and then sort of that readiness for July next year where all non-majors have that phase 1 obligation. But beyond what is known, there's a whole bunch of other opportunities. So as I mentioned, energy is one of the new sectors that we're looking at, that we're starting to develop technical standards for. Treasury has also designated telecommunications as another target sector, and there'll be other sectors in the economy as well. Commonly things like superannuation, wealth management, and insurance are probably likely candidates. They'll obviously have a longer time frame, but it is important. I guess it's interesting to see how those sectors start to be introduced. And then it's the combination of the data that becomes available as well. Within the banking sector, we have a really important milestone shortly with the release of the second Farrell report, which will look at a bunch of recommendations around where to take the CDR. But there are some known things. So at the moment, the ACCC is consulting on rules to simplify, to make more efficient, and to expedite larger adoption for ADRs. So they're looking at things such as corporate accounts and allowing data holders to be able to provide better, richer services for their corporate customers, and data recipients to be able to gain access to corporate account data. Secondly, opening up the marketplace for ADRs and making it easier to become an ADR with the concept of an ADR intermediary. So if you've ever dealt with like a Yodlee or a Basic or one of those sort of middle layer tiers to gain access to some banking data, those are the kind of players that they're looking at. Having that richer intermediary layer being available so that smaller ADRs that have specific use cases can start to integrate and get into the ecosystem, but don't have to do the full build and implementation as well. And I think likely what we're expecting as we sort of move into next year is the open banking is all about read access. It's about getting data out of banks, but as we move to look at how it has been done in other jurisdictions, such as the UK, it's the introduction of write access and opportunities around write access, potentially to initiate payments or origination of new product, or switching of accounts from one provider to another. As far as milestones, like I said, we're early in our journey. So there's Still, I guess, quite a significant story to tell, but things are trending quite well, I think, given that we have really only had live active data sharing for just over 5 months. We already have 6 data holders that are live or preparing to go live. We have 6 accredited data recipients. So we originally went live in July with 2 data recipients, Frollo and Regional Australia Bank. And we have another entrants that are now starting to go live with their service offerings. We have well over 70 ADIs that are currently sharing their public product data. And there's potentially more as well. So we do provide a service under the DSB that allows ADIs to publish and promote their product data and where to go find it. So based on that, we're currently seeing at least 70 of the ADIs that are sharing their product data, which is great. And I suppose it's probably, given the way that it's standardized, we probably haven't seen something like that in Australia before. We have a large pipeline of data recipients, so there is quite a significant backlog of organisations, businesses that are wanting to get into the consumption of data and start to offer you and I as consumers, added value or new products and services. So we have over 115 data recipient applications that are currently in various degrees of assessment under the ACCC. So some of those are significantly further progressed than others. As far as consumption and use of the CDR goes, we've already had over 3.5 million API calls. So to collect consumer data, so authenticated data, such as transactions or accounts, account balances, and the like. And there's over 15,000 active consents established. So it's small because it's early days, and part of the strategy that was taken with the initial release of the CDR was a slow sort of soft release, if you like, where it targeted a very specific set of savvy technical customers of the 2 data recipients that went live, and that has been grown. So as sort of some of the technical issues have been overcome and resolved, that's allowed it to grow as far as the advertising to larger customer base. So what I'd expect is you'll start to see that grow quite rapidly, the number of consumers that are actively participating in the CDR as we bring on more data holders, as we get more data recipients, and as there's more confidence that technically everything's working and interoperating correctly.
Hi, Mark. We've just had a question. Apart from Frollo and Regional Australia Bank, are you able to share who the other 4 ADRs are?
Yes, I think you can. And I actually think if you go to cdr.gov.au, you should be able to see a snapshot of all accredited data recipients and data holders. So that stuff is publicly shared. I believe Intuit is one of them. And there's a couple more as well. But what I'll do, I'll send the link to Shane for the register of accredited participants. And we could share that round if you like.
Excellent. Thank you.
Yeah. So I think one thing I wanted to touch on just before we talk about barriers and opportunities going forward was just to spend a bit of time talking about, I guess, one of the differentiating factors for the CDR, because sharing through authenticated APIs isn't anything particularly groundbreaking. With LIXI, obviously, there's a much more mature history of technical standards development, and the APIs and the technical documentation is far more mature and further along than we are. But I guess one of the biggest selling points of the CDR is that it gives consumers, you and I, that control over our data. And it does it in a way that is informed by consumer experience research. And it's very much driven out of the research findings that we receive. And it's about putting us in control. It's about making sure that consent is comprehensible, that we don't have, a 10,000 word terms and conditions that bundles a whole bunch of stuff in, but that it is time bound, that we are asked to reconsent over a set period of time to make sure that we continue to comprehend, that we continue to get the best value, that we continue to be comfortable and safe with sharing our data, and it is our right. So a data holder can't refuse, and we have the control of who and how we share that data with. So I think that's one of the important underpinnings of the CDR that kind of sets it apart. And it's probably the value that it can bring elsewhere. The whole intention, because what the CDR is seeking to be is sector agnostic or economy, relevant economy-wide, is that it's trying to drive consistency and familiarity. The premise there is that we can build greater trust with consumers, but as we move, as a consumer deals with different data holders or different data recipients, or even different sectors, different industries in Australia, is that there's that consistency and familiarity every time, that they understand this is the CDR, the process that they go through to give consent is familiar, it is consistent, and making sure that we have one approach to do this rather than kind of create a fragmented, disparate approach to deal with control of our data. Like I mentioned, read access, we have specific durations with which consent remains active. So every 12 months, a consumer, up to 12 months, a consumer needs to reconsent and go through that process again. That does vary, but there's control over the timeframe that consumers can grant access, as well as to what extent, what type of data they share as well. And one of the really important parts of this is what happens to my data when I no longer give consent. And the underpinning of this is something called the data minimization principle that applies to the whole of the CDR. So what that means, in effect, is that there is an obligation imposed on the consumers of data, the data recipients, to delete or de-identify all data when the consumer withdraws their consent. There are some particular, detail behind that, but in effect, you and I as consumers have that control to tell data recipients that when I no longer need or want to use your service, that you must delete my data or de-identify that data so that you cannot attribute it to me. From a technical perspective, we're built on a bunch of well-established international standards that allow us to deal with authorization and authentication in a secure and well-established way. And in fact, a lot of the CDR's security profile is built around what has been done in the UK. The UK and open banking implementation there was built on something called the FAPI read-write profile. It was financial grade APIs. So it was about looking at banking sectors and financial services and the security requirements that were necessary to be able to access and do, interact with banking products, and making sure that there was enough security where consumers are interacting from a third party. So the CDR is built on those foundations, and then there is our jurisdiction-specific consent model, or the differences that are the business logic of the CDR that we build on top of that. So we look at, the types of data that are to be shared and how that data gets shared, and the consent model that then overlays that works kind of in unison with the consumer experience. So we've done, I guess, probably one of the most important parts to that as well is not just the technical standards, but it's the consumer experience guidelines that set, I guess, a benchmark for best practice of how these things should look, how the data recipients and the data holders should present consent, should present authentication and authorization as well. So that's all great. We've gotten thus far, we've gotten to November 2020. We're sharing, the second phase of data for the 4 majors. We're starting to see some of the non-majors come in. But what are the barriers to greater adoption? And there still are a few. So the first is the availability of customer data. So until we really get all data, ADIs onto phase 3 of consumer data, then the accessibility or the coverage across the banking sector won't be there, but that's not that far away. The second barrier is consumer awareness. So I think a large part of this is driving that awareness campaign to consumers to help them understand how this is different, why this is important, how it might be relevant to them. In part, that's related to the barrier around having more ADRs in the marketplace as well. So as we start to grow that ADR marketplace, and I get the sense that partly that is because of the type of data available. I think making some assumptions, the lending and the mortgage products are going to be quite valuable to be able to gain access to that data, as well as the transaction data. So we should expect to start seeing that ADR marketplace grow fairly significantly now that we're starting to open up access to that phase 2 data. The other barrier, I guess, is moving towards interacting, that sort of dynamic interaction with the data holder, moving into right access and potentially solving for some of the common use cases that people typically talk about, such as account switching, moving from one bank to another, origination, and also being able to initiate payments as well. The two other barriers to adoption is growing that intermediary space, making it easier for smaller ADRs to enter without having the burden of implementing everything, staying abreast with all the rules and the technical standards, but also, I guess, the value that intermediaries provide as well. Oftentimes, it's about generating new data insights, as well as making sure that there's that accessibility to all the data holders, rather than having to build point-to-point solutions to interact with each data holder. Finally, the ease of accreditation. So I believe there's quite a bit of work being done at the moment to improve and streamline this process. But the easier it is to become accredited and flow through that process, then the easier, I guess, it is to grow that ADR marketplace as well. So opportunities and future enhancements. There's a lot being done actively at the moment, and there's a lot of opportunity of where we're looking to things going. Some of this stuff requires things such as a second Farrell report to be released, and potentially some of those findings to be adopted by the government and flow through into rules. But I think there's some obvious opportunities that we have that we can face into early next year and across the next couple of years. One of the things that I guess in a way is a bit of a barrier, but it's also an opportunity, is improving the quality of the data that is provided by the data holders. So what we're seeing is that there typically is a very high level of compliance and conformity to the technical standard. Everyone can kind of build to the technical standard and provide their data in that format. But it's the consistency of how everyone interprets their products so that they are easy for the data recipients to consume in a consistent manner. Ultimately, the other sort of end of the stick is that then data recipients have to build customizations and logic to integrate with each data holder, because the way that one bank represents a mortgage account, although structurally correct, looks very different to how another bank represents it. It might be the structure of their rates, or how they deal with bonuses or discount rates and the like. So we do have a bit of work now that we're starting to get real live data being shared, is to start working towards greater consistency. And the more we can do to that and have greater uniformity, the better and easier it's going to be for the consumers of the data. But what we need to be mindful of is that what we don't want to do is impose a bunch of presupposed business models onto how data should look like and actually inhibit innovation. So we ultimately want data holders to have flexibility where they offer different products, or the features and the benefits of a product are different to how another bank might do it. So we don't want to constrain things in that way, but we do want to make sure that things where they are similar or the same is that they're consistently presented. We're looking next year to consult on how do we move towards, I guess, a second version of our consent model, moving into simplified reauthorization, being able to easily extend, renew, or change the terms of my consent between the data recipient and the data holder, moving into a slightly more fine-grained consent model, and introducing newer modes of authentication that are both stronger, but they're also more intuitive, so they'll give a better customer experience. And we're really looking at this as, well, how is this going to apply not just in banking, but in energy and other sectors as we go through them. We've spoken a bit about payments initiation, switching, and account origination. So they're definitely opportunities, things that we're waiting to see the direction as to where we go. There's further enhancements to be done around more of the business product side, corporate accounts, but also white labeled products, making it easier for data holders that don't necessarily manufacture all their products to be able to easily present them within their data holder implementation. From the ADR side, there's a lot of work being done on tiering of accreditation and looking at risk levels of data that's being shared, and making it easier and or cheaper for data recipients to enter where they're not looking to collect as much sensitive data as another data recipient. Energy is going to be continued to be a focus next year, and I'd expect that there'll be quite a lot more focus on that. The work to be done on that will start to move. So we're very close to a first draft of the full energy data model. So from there, that'll go through a process of refinement and review, and then we start to move into what might be the obligation dates for the energy sector. The other opportunities are really about the consumption of data. So looking at combining or combined sector use cases. So as data becomes available across sectors, I think there's a huge opportunity for savvy data recipients to look at how they're going to combine and use the data to gain greater insights or to offer new products. Looking at how do you combine transaction data from banking with my energy consumption from my household, that sort of stuff. Lastly, and I guess this is what we're going to touch on in the next slide as well, is the other opportunity space is that we don't want to reinvent the wheel, and how do we start to integrate other adjacent standards to the CDR? Again, I think the benefit that CDR offers is that consent and the security overlay. So if we can work out a model where that applies and there's a consistency in the familiarity for consumers, how do we start to bring in existing mature standards that already solve a component of the sector that we're in, so that we don't have to redefine, that we don't have to define things two different ways, and make data holders build to do different implementations, but also the consumers of those existing standards having to integrate in it just yet another way. So I think there's a really rich opportunity space there that we can look at. I'll touch on just quickly one last note on this slide is down the bottom, there's a link to something that we call our future plan. So this is about the quarter by quarter work plan that the data standards body is adopting. And we're looking at how do we make sure we've got as much transparency and openness around the priorities that we see, the work that we're taking on in each quarter. And as a result, effectively, the capability and the enhancements that will be coming into the pipeline. So in effect, it's our roadmap of work. So it's a great opportunity for people to get involved, to put forward their thoughts, their priorities, because it is, again, very much community driven. So whilst we might see the value of prioritizing certain work early, participants, the community may see there's actually greater benefit in looking at some of the other aspects that we have further out, either in our backlog or further down the track, being brought forward as well. So anyway, that's a good one to be across if you're interested.
Hi, Mark. We've just had a question come in that relates to that slide. Does LIXI have a role to play as open banking continues its journey?
Wow, fantastic question. I think that probably brings us to the next slide, if that's okay. I think it's a really good one to talk about. And look, that's something that we have been starting discussions about. What might that look like? What would it entail? But I think absolutely standards like LIXI and others that are out there, even if we just look at the banking sector, it doesn't make sense for the CDR to reinvent the wheel every time. What we want is greater consumer confidence and trust. We want a secure way to be able to interact across the gamut of data recipients and data holders in this marketplace. So leveraging existing mature standards where it makes sense seems like a great opportunity. So if we can solve how might we allow standards like LIXI to be incorporated under the banner of CDR, so that we can make use of the standards that LIXI supports and provides, then I think it's absolutely a great opportunity. And I think that's where I'm coming to this without too many kind of assumptions. I think that's where everyone on the call, the LIXI community as well, it would be great to hear what you see or how you see something like that happening, and whether or not you do see the benefit in that. But I think where there's motivated standard setting bodies within a sector, it makes a lot of sense that we work with them to understand how do we integrate that, because that would allow us to move into things like origination far quicker than we'd ever be able to. It would reduce the build effort, the implementation costs, and the maintenance costs for banks, and it would allow the existing existing broker market, as an example, to make use of the standards that they've already built to. There would be then still the protections for the consumer, for you and I, to make sure that consent has to be established, that we have our rights to be able to control that, and to be able to withdraw consent at any particular time. There'd be the safeguards around security. It does bring some other considerations. It brings considerations around regulation and compliance, because the CDR is a regulated regime. But I don't see that preventing or stopping us facing into that opportunity. So I think it's going to have benefits both ways. I think there's things that the CDR can offer those existing adjacent standards, and likewise there's value that those existing standards can offer to the CDR.